Morning, welcome to IG's early morning call. It's Friday, 2nd of February. Let's take a look at the headlines as we await the start of what looks like a stronger start across the European markets. We saw more records yesterday on Wall Street for the Dow Jones industrial average particularly, but also the S&P 500 24-hour markets continuing to push higher as we see the interest remaining amongst equities. Today, it's all about economic data in the States and US jobs data from the Labour Department. Non-farm payrolls. We're expecting something like around about 180,000 jobs to have been created in the month of January, but we saw a weaker than expected ADP this week. Could that put pressure on the downside potentially for this reading? And as we look to a week, or have looked back on a week of earnings, we look to more today. We see Exxon Mobil and Chevron reporting before the market opens. Take a look at volatility, as we do every day. Second day of the week, second day in a row of losses, but looking as though we could well end up with a positive number on the account for this week, indicating momentum is on the upside. That doesn't seem to have dissipated any enthusiasm for buying stocks. It's been a good week for the London markets. We started out the week as we began with the markets at 76.40. 76.71 is where we are, just 30 points up on the week overall. But nonetheless, it is looking as though we could well end up with a positive week, certainly looking for a positive start in the London markets as things stand there at the moment. German DAX, new record highs this week that we've seen. Another new push high yesterday, 17,016. Trading just a few points away from that at the moment, but holding on pretty much most of what we saw yesterday in terms of the upside. French CAC 40, looking as though now we are looking at a weaker start on the French markets. Not sure what's moving in terms of some of the individual stocks at the moment. It's very difficult at this point of the trading day, unless you get some really big heavy movers on the markets, which steer some of the headlines. It's very interesting. It's very difficult to work out where the pressure is beginning to build. But certainly the French market's looking like the weaker party across the European markets at the start of today's session. Let's take a look at what's been happening in the Asia-Pacific markets, where we've seen some big losses for the markets in part this week, but we've seen gains towards the end of the week. We've got a 1.4% rise. Singapore Hang Seng Stock Index also rising on the session in today's trade, despite the fact we saw the CSI 300 in China down as much as 3.3%, according to a Bloomberg headline I saw earlier this morning. But even that has improved as we go into the back end of the session today. Nikkei 225 up almost 0.2% on the trading day today. Wall Street closed yesterday, despite the fact we saw a couple of earnings news headlines yesterday that really disappointed the markets. We saw a record high for the Dow Industrials, S&P 500, NASDAQ Composite also showing gains with a rise of 1.3%. I want to begin with this chart, though. This is Peloton, one of the big decliners in yesterday's session. That fall on the 24-hour markets yesterday represented a near quarter of the total capitalization lost in the session yesterday. That red candle represented a drop of 24.25% for Peloton after the company reported some disappointing numbers before the market opened yesterday. And we saw immediately the markets open, we saw a drop on the trading day, and it held on to pretty much all of where we were as at the low point yesterday. So Peloton, one of the disappointing stocks in yesterday's session. I want to run through where we saw these records. Yesterday we saw a record close on the Dow Industrials, 24-hour markets. Highest close we've ever seen on the 24-hour markets, although the record this week was taken on Wednesday when we saw the markets rise to 38,585. 38,526 is where we're trading at the moment, holding on to the 24-hour market gain yesterday, but short of that intraday high that we saw midweek. But the markets really seeing money going into tech yesterday. A relatively strong candle yesterday for the NASDAQ, not quite at record highs, but not too far away from a record close yesterday, currently trading at 17,509. Now, it's all about non-farm payrolls today. Non-farm payrolls represents what could well be the last bit of data this week, which might give us a steer on the markets as you head into the back end of trade and the European markets this afternoon. We're looking for 180,000 jobs having been created in the month of January. Unemployment rate expected to rise to 3.8% from 3.7%. Why, I hear you ask, is the unemployment rate expected to rise when we've got more job creations? It's because it's taken at a different data point in terms of the date, and also a different backdrop in terms of the overall numbers. Average hourly earnings expected to see a rise month on month of 0.3%, 4.1% year on year. And for that, I want to show you what's going on in the foreign exchange markets with the dollar basket, first of all, before we take a look at the euro dollar trade. And it is down on from yesterday's close. Yesterday was a down day. This is the worst performance we've seen since the 27th of December for the dollar in any one single day in terms of where the candle moved. And we've got another knock lower ahead of that non-farm payrolls data out later on today. Let's take a look at what's been happening on the euro dollar trade. We are up at the moment after a very strong day yesterday for the euro, currently trading at 108.85. Now, let's take a look now at an event that might stir some volatility in trading next week for the week starting Monday, the 5th of February. And I'm going to focus on what's happening on Tuesday with the Reserve Bank of Australia on interest rate watch. No change expected. Cash rate's expected to stay at 4.35%. At the last RBA meeting, policymakers considered that bringing inflation back to target might take longer than had been expected. Will the latest inflation data make them change their view? Well, trimmed mean CPI this last week came in at 4.2% in the fourth quarter. Yep, it was down from 5.2% in the prior quarter, but not down by as much as many had been hoping for. The trading volatility could be around this pair here. This is the Aussie trading against the US dollar. Now, in this week, we've seen it knock lower to levels that we've not seen since the 17th of November. And that was a short trade for the Aussie. Then all of a sudden came this reversal in the US dollar, which has seen this push higher. Now, my initial expectation was that the risk could well be on the downside. But if you consider what's been happening this week in terms of interest rates, economists are now saying that there might even still yet be an indication from the Reserve Bank of Australia that markets may have to sustain another interest rate rise because inflation is not coming down as fast as expected. Now, the volatility could well be around this pair. If we see a hawkish rhetoric, a hawkish statement coming through from the RBA, then I'd be a buyer of this at 65.95. Stop goes underneath recent price action with a view to taking it higher. Where's it go? Well, this high here back on the 4th of December is at 66.88, which might be a good place to go if you're long on this. But I'm not so sure there's a long trade to be had here. If we do get an indication from the Reserve Bank of Australia that things are on track and the next move is on the way down at some point, there might be a sell here for the Aussie against the US dollar. I'm sorry not to be more specific, but it's very difficult to get an indication, I think, here until we see that statement out from the RBA. If we see something that's edging on the dovish, stop goes up here to around about the 66.30 level with a view to taking this lower and beating the low point that we had there back on Thursday, the 1st of December, or in February, I should say, I beg your pardon, all the way down there at 65.08. Very difficult to know where this is going to be, but I suspect we could well see some volatility around the Aussie trading against the US currency. Now, let's move on to one other area of the foreign exchange market. I just want to pick up on quickly before we go into corporates, because yesterday saw the Bank of England come through with an interest rate decision. I want to mop up some of the after effects of what happened there in terms of sterling, because what happened was that despite the fact we saw 6 members of the MPC coming through with a decision to keep interest rates on hold, which was the widely expected outcome, what we did see was that 2 members voted to raise rates. Now, that was a shock, and we see here sterling rising against that, albeit a weaker US dollar, so there's a bit of impetus on the upside because of that. But sterling is pretty much holding on to this at the moment at 127.49. I think sterling is going to be the interesting one to watch, and if we see more argument for interest rate rises, I don't think it's seriously going to happen. It's just a question of just whether or not there's going to be a delay in interest rate cuts, and that was the message taken from the meeting yesterday. So it was 6 unchanged, 2 to rise, 1. Only 1 member of the MPC wanted interest rate cut at yesterday's meeting. Now, I've got a couple of traffic data stats to come through this morning. I want to go first with Ryanair. Ryanair has seen its passenger traffic rise 3% to 12.2 million passengers in January. Sorry, they call them customers. The January load factor, 89%. Now, remember, before COVID, this used to hover around about the 92 to 94%. So they're still operating under capacity, but they have put on extra capacity, and that's one of the things I think that Ryanair will say. Operated at 71,700 flights. But look at the share price chart. In this last week, we've seen it hit almost a new high, 1976. You've got to go all the way back here to the highs we saw back in August 2017. Since we last were at these elevated levels of 19 euro 76. Strong day yesterday. Good passenger numbers out today. Passenger numbers don't often have enough momentum in them to stir any really big shifts in the stock price. But it'll be interesting to see where Ryanair opens up. So good numbers out from Ryanair. Staying on the charts, just wanted to update you as well on what's happening with Wizz Air. Wizz Air will have you understand that it's the fastest growing airline, discount airline across Europe. Well, that's true, but it's only because it's coming from a smaller base from Ryanair. But the Wizz Air January traffic numbers carrying 14.2% increase in passengers year on year. Load factor of 82, below the 89% that we've seen for Ryanair. So Wizz Air is not making as much money per flight that we're seeing for Ryanair. That stock will open at 19.93. Apple shares fell in extended trade late on Thursday after the revenue forecast fell short of analyst expectations. It reported sales of $119.58 billion and profits of $2.18 per share, both above analyst expectations of $1.18 and $2.10. Regarding expectations for the current quarter, Apple said revenue will be at least $5 billion less than this time last year. This would mean revenues down, whereas Wall Street anticipated nearly 96 billion. It also confirmed analyst fears that iPhone sales are losing ground in China. Fourth quarter sales in China reached 20.82 billion, nearly $3 billion less than what the markets had been looking for. And Apple was one of the few shares that fell in trade yesterday. Global phone sales are Apple's earnings and sales key driver. They rose 6% in fiscal first quarter, higher than forecast. But look at what happened yesterday. All sessions on the IG platform, we saw two very big wicks, the biggest on the upside, with investors and traders taking the stock up in extended trade to begin with because of the good numbers. Then came the realization that there was some, if you dug down into the numbers, there was some not particularly pretty numbers, especially in China. And in fact, we hit at one point yesterday levels not seen since the 7th of November last year. There was a recovery, but we're not too far away from those lows that we've not seen for a couple of months or so. The stock will open all sessions on the IG platform at 9 o'clock this morning at 181.42. Outside of that, Amazon and also Facebook owner Meta rising on the markets late in yesterday's session after earnings. I want to begin first of all with Amazon.com. Shares jumping nearly 10% in trading. AI features in its cloud and e-commerce business spurring robust growth in the fourth quarter, according to the statement, which sent earnings and revenue above forecasts. Posted earnings of $1 per share. We've been looking at 79 cents. Revenues of 170 billion. We were looking there for revenues initially at 166 billion. So that is better than expected, and Amazon benefiting from this. There's a lot more to come, according to Amazon's chief executive, Andy Jassy. He says generative AI revenue still relatively small, and he expects the technology to drive tens of billions of dollars of revenue over the next several years. Look at this big push higher we saw yesterday in Amazon stock. At one point, we traveled up to levels not seen since the 8th of December. When you consider that Apple is a $3 trillion market cap company, this is still relatively small, but nonetheless still a big stock on the index. And when you get a move like this, it does twist the rest of Wall Street markets. As we saw earlier this week, developing AI offering has a cost. After Microsoft's $10 billion investment in OpenAI, Amazon announced spending up to $4 billion on chatbot maker Anthropic. Capital expenses will also increase to support the growth of AWS. This includes investment in generative AI and large language models. But Amazon's got to do it. It knows that in order to continue to make these excess profits. And the stock, as I said, was up yesterday by a margin of 9.3%. Meanwhile, Meta shares jumping over 16% at one point, all sessions on the IG platform after Wall Street closed on Thursday, as the Facebook owner posted better than expected earnings, sales and forecast and announced its first ever dividend. A big seminal moment in the history of Mark Zuckerberg and the Facebook owner. Net income rising more than 200% Yep, 200% to $14 billion or $5.33 per share, exceeding expectations of $4.96. Revenue for the fourth quarter rising 25% to 40.11 billion, above the 39 billion forecast. Meta also announcing a dividend of 50 cents per share. It also authorized an additional $50 billion in share repurchases. I want to show you this. This is rising to a record high. Look at that. Absolutely whacking great big candle yesterday, and very close to being a Marabuzu. Marabuzu candle is where you enter at one point and you close at the extreme of the other end of the candle. This happens to be a green candle because it was on the way up. We did see a little bit of selling at the close at 454.82, but this is a stock where, if you look back, it's never been as high as this. And Facebook has had a tremendous run since the lows we had back in October last year in terms of the percentage move that we've seen for this stock, up 62% just in the last 3 or 4 months or so. But of course, all this yesterday coming on the day after, the same day when the social media bosses, including Mark Zuckerberg, were told they had blood on their hands for failing to eradicate child abuse on their platforms. There was a hearing in Congress, I think it was, but this doesn't seem to have dented the share price. But it is a cloud that hangs over all social media companies, according to the commentary following on from that hearing. Let's look at one other stock. Just very quickly, wanted to follow up on Intel. Intel stock didn't actually move very much in yesterday's session, but I do want to show you what happened all sessions on the IG platform, because this might have ramifications this morning as the story develops. Wasn't much movement. It was down 0.4%. We've got to bear in mind yesterday it was a good day overall for tech stocks, outside of Peloton, that is. The Wall Street Journal reporting late last night that Intel is delaying the construction timeline for its Ohio chip plant. It's now not to be expected and finished until late 2026. It came as a shift in spending to AI data servers dominated by rivals like NVIDIA and AMD. And that's pulling away demand for traditional server chips, which is what Intel's core offering remains. So that's going to be, I think, possibly a story to watch in the next few days. Earnings out today. Week dominated by tech. We're in old tech today with Chevron and Exxon Mobil. Exxon Mobil first expected to post earnings of $2.20 per share and revenues of 91.12 billion. This is one of these companies that, as I say, is part of old economy, and it's been holding on to recent gains recently. The stock will open at 9 o'clock this morning ahead of the earnings out a little bit later on, 103.11. Meanwhile, Chevron's earnings are seen at $3.20 per share, I beg your pardon, revenues of almost 50.9 billion. Again, like what's been happening in other oil stocks, we've seen sideways traveling recently. In fact, recently as well, we've seen Chevron take on a new lower low. That low that we had there, what was that, back in January 24th? That's the lowest print we had since the 18th of July 2022. Chevron finding they're going a little bit more tough than others. Staying on the oil, wanted to update you on what's happening with the price of Brent. It's been a very poor week this week. We're holding on to recent losses. Yesterday, OPEC Plus sources told the market it will decide in March whether or not to extend a voluntary oil production cut in place for the first quarter. But now the organisation made no changes to the group's output policy. Quick update on last Friday's Baker Hughes rig count. Just to remind ourselves as to what happened last week. Total rig count rose by 1 to 621. Number of oil-producing rigs rose by 2, from 497 to 499 overall. Going back to the charts, just updating on what's happening with spot gold. Rising again today. Yesterday we saw a peak above this line at 2061, which took us to levels that we've not seen since the 2nd of January. My price target remains 2121. The rise to a record here that we saw back in, 4th of December. That's my price target. I'm long on this with a stop below this 2000 level. I think I might start to bring that in a little bit. That stop was initiated by me 3 days ago, and I might bring that in to lock in some of the profits I'm getting. Maybe something like around the 2030 level might be a good place now to put your stop loss if you're long on gold. And copper, just to update you as well on what's happening there, because there has been a second day in a row of declines. We've seen an outpouring of some money from the Chinese markets today on concerns about the economy. This is showing that there is frailty in demand for copper at the moment. So it's an excuse here to take some profits. and people taking it down for a second day in a row. That's it from me. We're back at 10:30 with Charting the Markets. Not much to watch for in terms of the start, in terms of individual stocks to watch across the European markets, but we are looking for gains here in London, but losses at the moment in the French markets. We're back at 10:30 with Charting the Markets with Axel Rudolph.